Topic 11. Market Intelligence. Market intelligence, MI, is the systematic process of collecting, analyzing, and interpreting information about customers, competitors, markets, industries, technologies, regulations, and external environmental trends to support strategic decision-making and competitive advantage. Unlike traditional market research, which often focuses on specific products or customer surveys, market intelligence provides a continuous, enterprise-wide capability that transforms external data into actionable strategic insights. For modern chief financial officers, CFOs, market intelligence has become an essential component of corporate strategy, capital allocation, business transformation, and long-term value creation. Leading CFO development programs emphasize that finance executives must evolve from financial controllers into strategic advisors who combine internal financial analysis with external market intelligence to guide executive decision-making. Organizations increasingly operate in environments characterized by digital disruption, geopolitical uncertainty, technological innovation, changing customer behavior, and intense global competition. Consequently, finance leaders require comprehensive market intelligence capabilities to identify opportunities, anticipate risks, and support agile strategic planning. Market intelligence encompasses multiple categories of information. Customer intelligence examines purchasing behavior, customer preferences, satisfaction levels, demographic changes, digital engagement, and emerging needs. Understanding customer trends enables organizations to improve product development, pricing strategies, customer experience, and long-term relationship management. Advanced analytics and artificial intelligence increasingly allow organizations to personalize customer offerings while predicting future demand patterns. A second major component is competitive intelligence, which analyzes competitors' products, pricing strategies, market positioning, financial performance, innovation activities, partnerships, acquisitions, technological capabilities, and strategic initiatives. Competitive intelligence enables organizations to benchmark performance, identify competitive threats, and develop differentiation strategies that strengthen market positioning. CFOs frequently incorporate competitor analysis into investment decisions, budgeting processes, acquisition evaluations, and strategic planning discussions. Market intelligence also includes industry intelligence, which evaluates industry structure, growth rates, profitability drivers, technological developments, regulatory changes, supply chain evolution, and ecosystem dynamics. Understanding industry trends enables leadership teams to identify attractive growth opportunities while anticipating structural disruptions that may reshape competitive landscapes. Industry intelligence supports strategic decisions regarding diversification, portfolio management, digital transformation, and long-term investment priorities. An increasingly important element is macroeconomic and geopolitical intelligence. Economic growth, inflation, interest rates, exchange rates, trade policies, geopolitical conflicts, environmental regulations, labor markets, and technological competition significantly influence corporate performance. CFOs monitor these external factors to improve forecasting accuracy, capital allocation, treasury management, enterprise risk management, and strategic resilience. Integrating macroeconomic analysis with market intelligence allows organizations to anticipate external shocks rather than simply reacting to them. The digital economy has transformed how organizations generate and utilize market intelligence. Traditional surveys and historical reports are increasingly supplemented by big data analytics, artificial intelligence, machine learning, social media monitoring, web analytics, satellite data, digital platforms, and real-time customer interactions. These technologies allow organizations to identify emerging trends faster, detect market shifts earlier, and make data-driven strategic decisions with greater confidence. AI-powered predictive analytics can identify future demand patterns, competitor behavior, pricing dynamics, and customer preferences before they become visible through conventional reporting methods. For CFOs, market intelligence directly supports strategic capital allocation. Investment decisions regarding acquisitions, new products, digital transformation initiatives, geographic expansion, manufacturing capacity, or technology infrastructure require robust market analysis alongside financial evaluation. Finance leaders increasingly combine traditional financial metrics, such as net present value (NPV), internal rate of return IRR, return on invested capital ROIC, and economic value added EVA. With market intelligence indicators such as customer lifetime value, market share trends, ecosystem positioning, digital adoption, and innovation potential. Market intelligence also strengthens strategic scenario planning and enterprise risk management. By continuously monitoring external developments, organizations can identify early warning signals for economic downturns, technological disruption, regulatory changes, geopolitical instability, or competitive threats. Early identification enables leadership teams to develop contingency plans, diversify investments, strengthen supply chains, adjust pricing strategies, and preserve financial flexibility before market conditions deteriorate. Effective market intelligence requires cross-functional collaboration across finance, marketing, strategy, operations, technology, sales, and risk management functions. Organizations increasingly establish centralized intelligence capabilities that consolidate external data, competitive analysis, customer insights, and financial information into executive dashboards that support strategic decision-making at board and executive committee levels. The quality of market intelligence depends not only on data collection, but also on analytical interpretation and strategic application. Successful organizations distinguish between information and insight by converting large volumes of data into actionable recommendations that improve competitive positioning and enterprise performance. Finance leaders play a critical role by quantifying strategic implications, evaluating financial consequences, and translating market developments into investment priorities and business actions. The Global Competency Framework highlights strategy, market and regulatory environment, macroeconomic analysis, business models, business ecosystems management, performance management, and data analytics as essential competencies for executive finance professionals. CFOs are expected to analyze external markets, interpret competitive dynamics, identify emerging opportunities and risks, and provide strategic insights that influence organizational direction and long-term value creation. In today's rapidly evolving global economy, market intelligence has become a strategic capability rather than a support function. Organizations that effectively integrate market intelligence with financial analysis, digital technologies, strategic planning, and enterprise risk management are better positioned to anticipate change, outperform competitors, drive innovation, and achieve sustainable long-term enterprise value creation.